Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. As sort of expected, the Fed and Fed Chairman Powell still talking tough on inflation. Now that's despite some reasonably encouraging news on the inflation front. July's figures were just plus 0.2, 3.2 year on year. And the all-important core was plus 0.2 and 4.7 year on year. So still pretty sticky on that sort of core inflation, but I sort of commented before, on the way up, sort of headline was leading the way, and now on the way down, headlines leading the way as well. Well, it has seen some of the longer term rates sort of edge up in the US. The 2 year is just below 5% now at 4.99. And the all-important 10 year is way above 4% now at 4.27. Now, obviously, what has been sort of concerning global economies really is that rise in the oil price. That's well above $80 a barrel now. And if you look at that, sort of 4 or 5 weeks ago, that was trading below 70. So will the Fed still be on hold now in September? Because certainly the US economy is still pretty resilient out there. You've got a reasonably sort of robust consumer, and certainly earnings have been reasonably encouraging going forward as well. Indeed, the latest retail sales number was plus 0.7. That was versus an expected reading of plus 0.4. Now, on the political front, ex-President Trump has been indicted further on election tampering. And this all relates to the supposed phone call that Trump was trying to find those extra votes for Georgia to help swing the election. Interesting as well, coming out of Russia, the Russia Central Bank has increased their rates quite dramatically, from 8.5% to 12%. That's in an attempt to try and halt the slide in the ruble. So finally, are those sanctions now starting to bite into the Russian economy? Also quite interesting as well, President Putin has sort of made some claims that he might actually attend the G20 meeting in India in person. That's obviously a pretty bold move, given that there are arrest warrants out for him if he leaves Russia. Now, going the other way, the Chinese central bank has cut one of its key interest rates just by 15 basis points. Again, trying to stimulate that economy after some weakish data coming out on the Chinese. As stated, oil is well above $80, currently trading around 82.85 per barrel. That's up quite dramatically over the last sort of 4 to 5 weeks, which obviously does have inflation implications for the global economy. Now, in the UK, still expecting a further fall in inflation. Last print there was 7.9. That's expected to fall to around 6.7, 6.8. Now, Europe, in the heat of its sort of summer, are really grappling with sort of natural disasters. We either got flooding in certain areas or you've got wildfires. Latest wildfire is on the island of Tenerife, and that's causing some some pretty major headaches out there, evacuations, and not very easy just to evacuate a whole island. Now in Australia, again, that economy pushing along at a pretty good rate, and it'll be very interesting to see what sort of boost it gets from this FIFA World Cup. Because certainly those games have been pretty well supported, lots of travelling fans, and if it's anywhere like New Zealand, it will be a major boost to the Australian economy. Which is showing some pretty healthy signs out there. Housing looks like it's sort of bottomed out and starting to sort of pick up in certain areas. But also as well, you've got a Reserve Bank that hasn't had to increase interest rates anywhere near as much as some of its global partners. Now, as expected in New Zealand, the Reserve Bank left rates on hold at 5.5% for the OCR. Well, the commentary was quite interesting. Now looking at potentially not seeing any cuts until 2025. Although they did come out and sort of expect growth to start to increase in 2024. So that'll be interesting just to see where that growth comes from. Because if you're not stimulating the economy with rate cuts, where's it going to come from? Now, on the positive side, I say the FIFA World Cup, Women's World Cup, really provided a pretty major boost for the New Zealand economy. Estimates are around sort of $200 million being pumped in over the last sort of 4 to 5 weeks, which is a pretty major boost. Then on the negative side, dairy prices are down further, and really it's quite sort of dire out there in the farming sector. Although net migrations are holding up, latest data shows around 86,000 over the last 12 months. And also as well, food inflation is starting to fall a little bit. I mean, it's still up year on year, but the rate of increase is starting to fall quite dramatically. And that's maybe just a further sort of clear sign that, the sort of supply chains and the disruption from the wild weather we saw in the early part of the year is starting to sort of be rectified now. And just on food, Labor have come out now with a major sort of election promise to scrap GST on fresh fruit and vegetables. Though potentially the administration cost of that will sort of eat into most of the savings. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.